Hello, everyone, and welcome to Frontier Africa Reports. I am Bosun Amofaye. I welcome all of you, panelists, to this first edition of Frontier Opening Bell. We'll try to take a look at the continental markets, north, east, west, and south, and bring some of the best stories for last week to start the new trading day, and of course, a new month in the year that has been very interesting and very eventful since the 1st of January. Thank you very much. Let me quickly introduce my panelists from the top left. That's Ali Khan Sacho, who is an investment analyst, a trader, the founder and CEO at Rich Frontiers Management. Thank you very much for joining us from Nairobi in Kenya. Ali is taking a look at the East Africa and a bit of the Southern African markets for us on the show today and on a daily basis. To the top right hand of the screen is Wale Olusi, who is the head of research at United Capital. United Capital is an investment bank listed on the Nigerian Stock Exchange, one of the big investment bank in the country with a big relationship with the UBA PLC, one of the largest Nigerian commercial bank with footprints in about a dozen African countries, as well as in Europe and the United States. To the bottom left is Luke Fojebe. Luke is the team lead in terms of equity research at Vertiva Capital Management. Vertiva Capital is also a registered investment securities trading firm licensed by the SEC, also with headquarters operating from Lagos. Thank you, Luke. Good morning. In the middle right below my image is Uchenna Minis, who is an FX trader and the CEO at Blue FX Nigeria. Uche has his eyes on the currency trading on a daily basis here and around the world. Uche, it's good to have you on the program. And to the bottom right is Ayodeji. Ayodeji Ebro is a licensed securities dealer by the SEC. He is a CEO at Afrinvest Securities, another investment and trading firm in Nigeria, one of the leading firms registered and licensed by the SEC. Thank you very much, gentlemen, for coming on the program this morning, Frontier Opening Bell. Let's get the show started. Let me give everyone a very quick picture of where some of the African markets finished off last week. The Nigerian markets finished about 0.5% on the positive side. We'll talk a bit about that later. The Ivorian market, which is the BRVM, finished 0.61% on Friday. The Egyptian top index was 1.09% on Friday. The Kenyan market was also positive 0.45% on Friday. Unfortunately, the largest market on the continent, which is South Africa, the JSE, finished 50,483, a negative 1.76% on Friday. So that's a very quick roundup of our market on the continent on some of the big markets: Nigeria, West Africa, and Ivory Coast, Egypt, Kenya, and South Africa. But let's take a look at the East African markets, where some of the big stories actually came through. Some of the big story this morning, Rwanda is this morning, as we speak now, there's a press conference going on. A healthcare investment company listed on the JSE is in a cross-border listing today on the Rwanda Stock Exchange, bringing to the fore the COVID-19 big story. That's one story coming through. But again, if you look at the Kenya, the May inflation report came through over the weekend. Inflation was down 5.47%. Ali will speak to us in a minute about that and what's the thinking, how this was achieved in the month we just finished yesterday. The Kenyan Standard Chartered posted a 17% drop in its first quarter net profit, blaming the lockdown for that. So let's just quickly get this started with you, Ali, in Nairobi. Bring us your thoughts about where the major markets in East Africa finished off last week, and what's your take on the opening bell for today?
Good morning, everybody. If I can just start firstly with the first story you touched on, which was the cross-listing of this medical unit trust product in Rwanda. And I think that speaks to how two things. It speaks to the appetite for pension companies to get exposure to this sector, given its growing importance globally and in East Africa. And I think, once again, it shows you how nimble and ahead of the curve the Rwandan government is. They are very, very agile, and this speaks to their agility again. With respect to East African markets, if you strip out Boas on Safaricom, it's been a very poor performance in East Africa. Safaricom has basically done all the heavy lifting. Banking stocks, you were referencing Standard Chartered Bank down 17% first quarter, but the banking stocks have been hammered. And I think the last time we spoke, a number of the big flagship banking stocks announced dividends and then said, no, we can't pay these dividends. So that soured the sentiment in the sector quite dramatically. If you strip out Safaricom, our stock market is frankly at a 20-year low. So the question is, where do we go from here? A lot of people think we can't go much lower, but in the markets you always can go much further than you expect. And finally, just touching on that inflation data, pretty benign for now, which is a good sign. We've had sharp reductions in interest rates. The CBR is now at 7. So I think everyone is looking at that very carefully because people are concerned about potential supply disruptions and then supply side related inflation surge. But for now, that's not been a problem. And I think the central bank is sitting in a good place. And overall, market's still weak, shilling well behaved, 106.80. East Africa, relatively stable, but everyone getting very concerned about the spiking up in the COVID rates, which is a problem we're also seeing in South Africa, where you're relaxing controls at the time when you're seeing this very big surge, particularly in the Western Cape. So in many ways, I think we're embarked on an experiment in Eastern South Africa because our economies can't take the close down anymore. And I think our leadership has made the decision we've got to take it on the chin. And I think that's quite a tricky moment that we find ourselves in.
Okay, Ali, we'll come back to you on the Southern African market, reopening, businesses reopening, taking the first dip his finger into the waters today and see how the economy reopens in South Africa. A very big interview by the South African Central Bank governor with Bloomberg early this morning, talking about the role of the central bank in ensuring that the most advanced economy in Africa stay in good business and moving forward. So that is going to be a very big one that we're looking forward to today. Now, very important, let's talk about the Nigerian market here. Let's bring this on. Last week, it was the MTN commercial paper with 100 billion program opening and 50 billion naira in the first week that came through. That's a big story for Nigeria. UBA is also paying down on a 7-year 16.45% bond by the end of this month. That's a big story. Wale Olusi will be talking to us a little bit more about that. Meantime, Nestle, CFAO were part of the leaders on the Ivory Coast BRVM Regional Composite Index of 0.61% on Friday. And Ghana industrial output is up. So let's just talk about the Nigeria and West African markets. Let's start with you, Wale Olusi at United Capital, the head of research. Bring us up to speed very quickly on this UBA's 16.45% bond repayment ahead of the December 2021 deadline.
Okay, I think for the 16.45% payment, it's probably linked to what we've been saying in the overall environment in terms of yield. I think they are trying to take advantage of what is happening, lower yield. They are probably looking at their cost of funds and seeing how can they optimize what is happening now.
Okay, Luke, please go ahead.
Yesterday, we saw a sort of mixed trading at the Nigerian market. So at the start of the week, investors initially started taking positions in some stocks that are fundamentally sound and that are also trading at attractive prices. However, towards the end of the week, they started taking profits, especially in the banking sector. And that was why the banking sector closed down week on week. I mean, for the sectors that closed up, it was just the industrial goods and consumer goods. Even the oil and gas as well recorded marginal gains. So at the moment, when you look at the macroeconomic picture for Nigeria, it's not really attractive for investors to come in right now. And that's really clear to everyone to see. As a matter of fact, the foreign investors, the reason why most of them have not left I mean, they've been leading since late last year and early this year, but due to limited FX availability, a number of them have not been able to exit the market currently. However, should there be a good supply of FX and they decide to leave, we do not think the impact on the market will be very strong, because their exposure to the equity market right now is way smaller than what it used to be before. So we think what will be the driving force in the Nigerian equity market going forward will be more of domestic participation. And looking at what the CBN started in Q3 last year, when the CBN introduced a dual market system in the fixed income space, where you have the OMO market that is mainly meant for banks and foreign investors, and you have the NTB market, which is meant for institutional investors and individual investors. And when you look at rates in the market that is meant for.
Yeah, look, very quickly. What's your call on today's trading day? For example, we're starting a new month. What's your call at Vertifa Capital?
Okay, so today we still expect like a bullish run. We have a number of stocks still trading at multi-yellows, especially in the banking space. However, we do not rule out the possibility of profit taking in some stocks that we see short-term, quick short-term gains, because the strategy for the domestic investors right now is not to invest for the long term. It's actually invest when prices are quite low, and then when they see like sizable gains within a couple of weeks, they begin to take profit. And we'll be seeing that trend over the next couple of months.
Okay, thank you, Luke, from Vertifa Capital. Ayode Jebo, let's ask you very quickly. This is the morning after the first full trading day after the Central Bank of Nigeria made a surprising 100 basis points policy rate cut on Thursday last week. So, as it were, so this is a new month. Is there anything likely going to change, or what you like to see moving forward as we start to really drill down and reflect more deeply on this interest rate new direction by the Monetary Policy Authority?
Good question. The first thing that we all have noted in that past trend is that the monetary policy rate has become ineffective. If you look at in terms of its correlation between lending rate and also fixed income rate. So even for the CBN governor alluded to that at the last the Hopper MPC meeting, and the MPC, or I would say the CBN, have used other policies to adjust rates or make any policy statement. So we see that as just a signal, just to signal an accommodative stance. But if we're drilling down to exactly what is actually on ground, when you look at it regarding the interest rates really very low, and for the bonds market, we still expect that would also continue to decline because of availability of liquidity. Also, for the foreign investors that are currently trapped, CBN have not been supplying, though they've been providing assurance, but we've been seeing some of them trying to deploy back some of those capital rather than continue to wait into fixed income securities. So you would notice that in the OMO market last week, for the 48 days, you saw a subscription as high as close to about 100 and some, over 100 billion in terms of subscription level. And that's resulted to the decline in rates that we saw from 12% to about 9%. So regarding the fixed income market, we don't expect any major reaction. It's going to the reactions that all the direction of rates will be based on availability of liquidity and options. So for we've been seeing commercial papers and also corporate bonds in the last few weeks. If we're able to, if we see more of that, that will also help absorb some of the liquidity that would have found themselves into the sovereign markets. And in terms of the equities market, we would also continue to see some form of oscillation, though we've seen, because of the low interest rates environment, in the fixed income market, the domestic investors are willing to take on more risk rather than stay with 4% per annum. They are willing to look at stocks that can give them even as low as 6 to 8%, okay, which will still be higher.
Ayodeji, thank you so much. Let's quickly bring in currency into this conversation, because at the heart of everything we're talking about, whether you're doing equities or you're doing bond, whether in South Africa, Nigeria, in Rwanda, in Nairobi, it's all about currencies. Let's talk about the South African market, which is one big story on the African continent for today. Ali.
Just to give everybody a perspective on the Rand, we traded above 19, which was the low for the year. That was around April 6th. And since then, the Rand has recovered all the way to about 17.50. Now, 19 was unthinkable in most people's minds. And now we're currently around 17.50. But I think what's going to really govern the Rand is going to be issues with China. If there's more intensity around this very adversarial US-China relationship, I think we'll have a risk-off mood and we'll see the Rand come under pressure. Domestically speaking, as you said, we're moving from level 4 to level 3. This was announced and the president spoke yesterday, and for the first time in 66 days took questions, which was quite interesting, and basically said that the economy was very weak. He inherited a very weak economy, which we know he did, but he said that he could not afford now to keep the lockdown. And I think what is interesting to me, Boasson, is there's this increasing realization across the continent that maybe some of the inputs that we made into our initial lockdown decision were made in a reflexive manner, seeing what other continents were doing. But really, we are in a unique situation, is that we can't simply afford to close our economies down completely, in part because we have such big informal economies. So I think the question we're all faced with, and South Africa is going to be the leader for us to watch, is the opening up going to mean a massive surge in cases? Is it going to mean an overloaded health system, which was precisely what South Africa was trying to avoid? And if you look at that hotspot in Western Cape, where 1 in 5 tests is coming back positive, that's pretty big, whichever way you care to look at it. I think South Africa is going to be a precursor to what is going to happen on the rest of the continent. Overall, in terms of the stock market, you've had this big rise in the gold price, which has meant which has lifted the South African JSE. It's largely been a commodity story because of the weak currency, the strong price of gold and platinum. You've seen those share prices rise, and I think that story will continue. But, you know, we're all watching very keenly to see how South Africa deals with the situation. And I must give them credit. They've really been articulate in talking about the challenges they're facing, from the president to his health minister to his scientists. And I wish more of our African countries would look at that as a tremendous communication strategy that they've got there. I really think we can all learn from that. Overall, as an investor, I personally think asset prices in South Africa are at rock bottom, but you know, with the Rand, it can go simply anywhere very quickly.
Okay, great. We need to continue to wrap up very quickly. If we look at the North African markets, I'm not too sure there is much on these markets. But again, if you look at Morocco, one of the big stories there for over the last week was the BCP Bank posting a 39% decline in first quarter net profit. Again, that's one story there. The largest markets to the north of the continent, Egypt, over the weekend set a new trading hours, which became effective yesterday, May the 31st. The main market, for those who are interested in that market, the Egyptian market, the main market will open at 10 a.m. to 2:30 p.m. That's just about the same trading period for the Nigerian stock market, with a pre-open at 9 a.m. So this is typically the new announcement for those who are interested in the Egyptian market. But again, looking at the Tunisia, which is a much smaller market, total market cap about 10 billion US dollars. The report from the exchange over the weekend shows that the first quarter was not as good as expected for overall income for the listed companies was down about 0.5%. That's some of the big story from the North African market. In other news, you have the story around the AFDB Board of Governors allowing an independent probe into issues around the incumbent president, Dr. Akinwumi Adesina, who is seeking a second term in office. So all of this, so let's just begin to wrap up, gentlemen, on this show this morning. Let me start with Uchenna, if you can hear me, let's start with you. Give us about 30 seconds. What do you think the currency play will be as we start a new month?
I still think we're in a place whereby there is a lot of global risk, geopolitical tension that's continuing to weigh on currency strength. Frontier and emerging market space. So I don't see any tangible positivity that can continue to support growth in all of these spaces, especially as Ali has mentioned, commodity-driven markets like Nigeria, South Africa, whereby risk would always continue to push downside pressure on all of this on the global space. We're continuing to see tension arise now. Just got real-time alert whereby China has looked to put a pause on soybeans purchase and also pork purchase as a result of trying to send a message to the US. And we can see what is happening in terms of social unrest in the US space too. This is continuing to breed a lot of, should I say, tension. And we are looking at different risks from different spectrum, from geopolitical, from social unrest to also foreign global risk in terms of if we're looking at that global holistic space. So I'm not looking at any positivity in terms of strengthening in currencies of frontier market and emerging market space.
Thank you so much, Uchenna. It's good to have you. Adejebo, in 15 seconds or 10 seconds, what's your take on the opening bell for today?
We also see some profit taking may also continue, but with the strong demand we've been seeing from the local guys, we expect that to also sustain the market, because for some of them are just watching to find out to be able to come in at the very right price. So we feel that we'll see that bargain hunting, as earlier stated by Luke, in the Nigerian equities markets this week.
Adejebo, thank you so much from AfriNvest, the CEO of AfriNvest Securities. Ali, let's round up with you. Where's your big focus today? Is it Kenya? Is it Rwanda? Is it South Africa?
I think, my focus is on South Africa. Uche was just talking about the Chinese slowing down on soybean purchases, and I think that correlation between China, geopolitical tension, and South African markets is going to be in play, and I'm just going to keep an eye on that. Plus, to see what the mood is around the opening up, because I think it's an important precursor for the rest of us as well, and so I'll keep an eye on that. But we're living in interesting times, many moving parts for us that we've got to keep an eye on. It's just quite unprecedented in that sense at the moment.
Thank you so much, Ali. We appreciate your time. Ali Satu from Frontier, Rich Frontiers Management in Nairobi. Thank you so much. Adejebo, CEO at AfriNvest Securities. Thank you very much. From Lagos, Luke Ofojebe from Vetiva Capital, also here in Lagos, as well as Uchenna Minis, Blue FX, the CEO of Blue FX Nigeria and FX Trader. Thank you so much. I guess Wale Olusi, the head of research at United Capital, left the conversation a little bit to attend to some other business. Today is Monday, so we appreciate your time this morning, gentlemen, for coming through on today's edition of Frontier Opening Bell. Thank you very much. We'll see each other again tomorrow at the same time.